property, plant, and equipment. In PPE, we will cover the definition, recognition criteria, measurement recognition, subsequent cost, measurement after recognition, subsequent measurement, depreciation, and lastly, derecognition. The definition of PPER. It is a tangible asset, held for production or supply of goods and services. It is expected to be used for more than one period, for administrative purposes, and for rental to others. The examples of PPER: land, building, machinery, motor vehicles, office equipment, furniture and fittings, aircraft, and ships. There are two recognition criteria for PPE. The first criteria is there will be a probable future economic benefits flow into the entity. The second criteria is the cost can be measured reliably. There are two measurement recognition in PPE. The first one is initial measurement, and the second one is subsequent measurement. Initial measurement. First is the purchase cost, which consists of purchase price, directly attributable cost, where the A cost that brings the asset to the locations and conditions for its intended use, and plus with dismantling cost and restoration cost, where the cost to be incurs at the end of useful life. The second initial measurement is self-constructed cost, which consists of all cost relate specifically to construction of assets. Next is the cost that generally related to construction and can be allocated to the assets, and plus the cost of borrowings such as interest cost and can be capitalized during the period of construction up to the point when the assets is ready for its intended use. There are two subsequent cost. Revenue expenditure is to ensure the assets are operating at their working order, they do not add on or enhance the value of PPE, for examples of repair expenditure and maintenance expenditure. Next is capital expenditure is to enhance the performance of PPE, can be capitalized only if they can increase the future benefits from the existing assets. For examples of replacement and improvements of components. Capital expenditure will be capitalized as PPE in statement of financial position, whereas revenue expenditure will be written off into statement of profit or loss. There are two measurement after recognition, which is the first one is cost model, where the carrying value are the cost less accumulated depreciation less impairment loss. Second one is revaluation model, where the carrying value is the fair value, if there is surplus, credited into asset revaluation reserves. If it is deficit, it will be expenses off into statement of profit or loss. Subsequent measurement by revaluation model. Situation 1. If the first time revaluation giving a surplus, it will be credited into asset revaluation reserves, whereas if the second time revaluation giving a deficit, therefore we will use the surplus of revaluation from the previous year to write off deficit. Subsequent measurement. Revaluation model. Situation 2. When the first time revaluation giving a deficit, it will be expenses off into statement of profit or loss, whereas if the second revaluation giving a surplus, the surplus will be credited in asset revaluation reserves. Depreciation is the measure of consumption, wear and tear and decline in value due to technological obsolescences as the PPE is used up in the operations. There are two ways of depreciation, The first one is straight-line method, where cost less residual value over its useful life. Next one is reducing balance method, where the cost will be multiple with the rate of declining balance. Derecognition. It can be done by disposal or when there is no future economic benefits from its use. Derecognition by disposal of PPE. It will dispose by removal of gross carrying value, eliminate accumulated depreciation. Or, the disposal can be done by sales proceed, where any gain or loss will be treated into statement of profit or loss either as expenses or revenue.